Cipla is the top loser on the Nifty as growing in domestic and US market growth underwhelms the business. The domestic branded formulations business as well saw slow seasonal growth.
Marico rallies over 5% after reporting an inline set of second quarter numbers, where the domestic volume growth was around 5% and the rural segment significantly outpaces the urban growth.
Keynes Tech second quarter margins beat street expectations, while revenue and margins are in line. The stock higher by nearly 4% at one point, now off the highs.
First Motors rallies 20% on the back of a strong showing as the realization improves. The company is likely to have undertaken price hikes in the quarter gone by.
Five-Star Finance under pressure despite reporting a strong quarter. The management cuts FY25 growth guidance to 25% from 30% earlier. Company also announces interest rate cuts of 200 basis points.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam, and as we speak, the markets are down 50 points, but the breadth of the market is encouraging. It gives you some kind of festive feel. At the start of this week, you were wondering whether or not we're going to see a sharper correction. Well, at least for now, the bulls, well, they're well and truly game on.
They are game on, Nigel. It's Diwali cheer, which is rubbing off on markets as well. For the last two trading sessions, the Nifty's recovered fairly from the lows of trade, and the mid-caps have done better. Can that be the order of the day for today as well or not? We will keep an eye out on that. And more importantly, the Nifty Bank, which was an outperformer yesterday, slightly subdued today. But in the second half, we have the Nifty Bank expiry that plays out as well. This is not just the weekly expiry, but the monthly expiry that plays out too. So we'll keep an eye out on all of those things. But let's talk earnings, because that is the place which is abuzz. Allied Blenders and Distillers, the company reported soft revenue growth in the second quarter. However, saw strong margin expansion. The profit after tax also aided by lower finance costs. Alok Gupta, who's from the company, joins in now to give us more details about not only the quarter that went by, but more importantly, about the year that we are looking at the halfway mark. Thanks a lot, Alok, for joining in. And as you had earlier promised that there would be margin expansion, you've delivered on that. So the question here is that, one, how much of your ENA has been captive versus last year? What is the plan here by the end of this year? And as a result of which, what do you see as margins by the end of this year?
Thank you very much. First of all, very happy Diwali to you and to your colleagues. The ENA captive percentage remains the same. We have one unit in Rangapur where we produce about 60 million litres of alcohol. So there is no change in terms of captive ENA versus non-captive. So that's really where we are on the captive consumption. As far as our margins are concerned, you've seen the Q2 results, and as we've stated earlier, I think the focus really is in terms of the midterm, how do we get to industry parity EBITDA, which we pegged at 15%. So moving forward, we do see and stay confident about a consistent margin expansion, but it'll take us maybe a year or two to get to the industry EBITDA levels.
Follow up on that, you said that your captive is still at where it was last time. If you could give us that absolute number, because I remember you saying that you want to, get to 100% captive sourcing.
So it's roughly about one-third. One-third is captive and two-thirds is bought-out ENA. That's the split.
And by when do you get to 100% captive sourcing?
We are looking at FY27 to be able to get to that number.
Got it. All right. And margins gradually are seeing an improvement towards mid-teens. Quick question for FY25. Should we be working with the revenue number of around 3,750 crores with EBITDA number of close to around 350 crores? Do you think that's doable?
Well, on the first one, we really need to see how the industry is heading. As you know, the industry has been fairly flat, H1. We get to see what really is the impact of the festive spirit. We do expect some bit of turnaround. So I think we'll have to really see on how the industry responds. So I will be sort of cautiously optimistic on hitting that number. The EBITDA number that you have indicated, my sense is we should meet or exceed that number.
All right, you should meet or exceed that 350 crore mark. The first half of this year, you're 180 crores. So even if we double it from here, closer to 360 crores, maybe if you're lucky enough with the top line, closer to 400 crores as well. Just on the top line itself, you said, you have to see how the industry pans out in the second half. There has been some softness. This quarter as well, your volumes were absolutely flat. So what's your volume target for this year?
Our government target for this year is roughly about 35 million cases. Our focus continues to be on the P&A segment and continues to be on profitable growth in mass premium. So when we look at our volume growth, essentially we see through a lens of where do we make money on our mass premium, which is our flagship brand and officer's choice. And sometimes we leave volumes on the table where we're not making money. The absolute focus is on P&A. So the growth that you're seeing in quarter two over last quarter, essentially larger part of the growth is coming from
Right.
P&A, which also reflects in our revenue growth. Only on the EBITDA number, just one thing that I would like to point out is that our Q2 EBITDA is 105 crores. So while H1 EBITDA is 181, as you rightly pointed out. So I think if you take the Q2 EBITDA and were to draw a forward curve, that might give you a better sense of where the year could end up.
Okay, all right. Alok, when you joined us, you had told us at the time with the IPO that you're, I think, at around 45% P&A, and you're looking to take it to 50%. You're almost there. You're at around 49% odd. So for the second half of the year, you see it stabilizing at around 50%. Point number one. Point number two, what about on realizations? Your creep kept up a bit because of this higher, better mix that you're seeing. Does it go 1,000 rupees and beyond? Where is that headed?
I think the P&A contribution is on track, and I think we'll meet the promised number. We are also seeing significant expansion in our gross margin. As you would see, there's roughly 250 basis point improvement in our gross margin. That is also a reflection of a better product mix and also better choice of markets where we sell. So I think these are two things that we are sort of very sharply focused on: sell profitably and pick up market shares that really matter in terms of margin expansion.
All right, final question then before we let you go. 96, 97% of your revenue is still from whiskey, but you've had new launches, premium vodka that you've added, Zoya as well, the luxury gin. You've expanded from Maharashtra into Goa and Rajasthan, even Iconic, which is now about 4.5 million cases. Where do you see this whiskey and non-whiskey mix head in the next couple of years?
I think whiskey will continue to be north of 90% of our salience, largely because India is a whiskey consuming country. Almost 70% of consumption comes from whiskey. As far as Zoya is concerned, very happy to share that we've opened up the export market. So Zoya is not only available in India now, but it's also available. It's now available in Dubai, and by end of this year, it will be available in 4 more countries. And this is a point that even I covered even earlier. There are a lot of focus on brands that have been built by us to have a global focus. Iconic is on a trajectory to be a 5 million case brand. So extremely happy about where the brand is heading. It continues to sort of grow in the existing market. We are opening up Karnataka and Andhra this quarter. Those are 2 large markets as for us.
Okay, all right, Alok. Appreciate you joining in. Cheers to the second half of the year. The first half has been quite good. The takeaway for me is 350 crores is well and truly on in this year. You're looking to exceed that. Wishing you and your entire team a very, very happy Diwali from here on. Well, let's slip into that short break. You come back. We'll be chatting with the management of Ask Auto. The MD and CEO, Mr. Kuldeep Singh Rathe, is waiting for us. Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, next earnings on our radar is Ask Automotive. The company reported a very, very good set of numbers in the past quarter. Margin expansion came about because of higher volumes and cost optimization initiatives. Mr. Kuldeep Singh Rathe, who is the CMD of the company, joins us on the show. Hi, sir. Good morning. And first of all, wishing you, your team, a very, very happy Diwali in advance. And hopefully the festivities are as good for the company in the second half of the year as well. Let's get to some numbers. First half of the year, you've grown by mid-20s. For the year, what kind of a revenue growth are you looking at? Point number one. And when you joined us earlier, you was hinting that at least you'll be seeing 100 basis point improvement in margins, which is encouraging. You have already clocked 12.2% for the past quarter. What's the outlook for the second half of the year on an average for the year as well?
Good morning, and first of all, let me wish you, your team, and all the viewers of CNBC TV18 a very, very happy and prosperous Diwali. Well, it has been a very, very good first half, as you have seen. But the more important thing is what will happen in the second half. And I'm very, very confident that the two-wheeler segment is going to perform very well. And I see a very good picture for the second half also.
You want to
And
put a
as far
number?
as
You want to put a number
As
to
far-
that, sir? What kind of growth? I'm just looking at the two-wheeler industry. It's seeing a growth of close to around 12%. But your growth is
Yes.
far better than the two-wheeler industry. So for the year, on an
Yes,
average, what kind of growth with margins?
I will only say that we'll outperform the industry. I have
By how
always
much?
we'll perform at least by 50%.
All right, by 50%. So if the two-wheeler industry is growing at 12%, you will grow at 18% minimum. That's good enough for us. And, wish you a very happy Diwali as well. There's a lot of cheer in your voice as you speak.
Thank you. And we will also maintain the EBITDA margins that we have achieved because now the economies of scale are coming.
Right.
Our Karoli plant is in good operation where we had invested about 430 crores. And even our plant and it has become EBITDA positive, at 45% capacity utilization. And
Right.
Our next plant, we are investing 200 crores in Bangalore, which we started only in March. I'm happy to announce that in the next quarter, we shall be commissioning it and it will be going on stream.
All right, that is incredible because you actually preempted my next question on Karoli itself, which turned EBITDA positive, and as a result of which your margins are at 12.2%. So when you say you will maintain these margins, will you maintain it at 12.2% itself, or as Bengaluru comes on stream and you have the Sirsa plant as well?
No, Bengaluru will come in stream in the next financial year.
Okay, so by when do we see margins improve once all of these plants are commissioned, including Sirsa plant, which will start contributing to revenue? What is the total potential revenue and margins?
Yes, you will see improvement in margins. Further improvement will improve in the next financial year.
How much further, sir?
Sir, I can't say now at this moment. Depends on what kinds of situation.
You must be having an aspiration, sir.
I'll not hesitate to meet you every quarter, number one.
Lovely.
Number two, that I feel I'm an optimist always. And I feel the two-wheeler segment, which has gone through very rough times for the last 4 years, it has bounced back. And with so much of the spending on the infrastructure by the government, which has to happen in the second half, I feel this will have a steady growth, the two-wheeler segment.
Okay,
So
all right.
I see a very good next year also.
Got it. All right. Give us a couple of more aspects from the JV you have with Ison Group. I think you all were talking about 100 crores of revenues. As of now, what is it for this year? What kind of contribution will come from there? If you could tell us. And the second part is exports. I think they were around 4.5 to 5% of the total mix. But you're expecting that to improve as well. So for FY25, FY26, how do you see this contribution go up on both these two aspects, JV and exports?
Yes. So on the export front, this year, one of our key customers, they have problems in Europe. So they are in the process of inventory correction. Still, we are growing on the export front. But we feel the next financial year will be exceptionally good because we have the orders from one of the customers for 75 crore orders, extra orders, which we have to start in January this year. So that will give a big boost to the exports next financial year. And as far as you said, the joint venture JV with Ison, the company has been successfully formed and will be launching the products in the next quarter. So you'll see the results of the joint venture in the next financial.
So as promised, we'll speak to you in the next quarter for prognosis on how that is panning out and the revenue outlook out there as well. Mr. Rathi, just before we let you go, this 85% stake that you had has now come down to 78.9%. This is the promoter stake that I'm talking about. As per the minimum public shareholding norms, you have to bring it down to 75%. You've done an OFS of 6% already. By when do you intend to reduce your stake back to that 75%? And in what mode? Will that be a QIP? Will that be further selling? How does that plan happen?
See, I can't say because our debt levels, are very much under control. They are less than 1 year of EBITDA, This year also, after doing so much of expansion, and our debt equity is continuously reducing, From the time we listed, it was 0.49. In March, it was 0.42. And I think we should close at 0.35 or so around that. So that's debt levels are under control. And there is no hurry to offload the next 4% because still 2 years' time as per SEBI regulations.
All right, we take that point, and you've given us an indication that you're not looking to raise funds into the company because your debt is comfortable.
I don't need the funds, which is a good part on this Diwali,
Yeah, wonderful. May you never need funds for the business. It will be self-sustaining, and then whatever you have to do, you do it via OFS itself. We'll keep an eye out on how that plans out. Wish you a very happy Diwali, you your team, much. And all your family members as well. We slip into a short break.
Thank you very much.
With that, let's talk about some important programming note. We celebrate 25 years of excellence. That's CNBC-TV18. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. We bring together visionary policymakers. We have the Finance Minister herself, Nirmala Sitharaman, the RBI Governor, Shaktikanta Das. Then you have a bunch of industry leaders like HSBC India's Hitendra Dave. There is, of course, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders, as you can see on your screen. The roadmap for the next 25 years of growth for India will be charted along with global leadership. You don't want to miss this.
Welcome back. Good recovery on the Nifty from being down 120 points in the first 10 minutes of trade. Well, now we're down only around 20 points. So that's pretty good. And a few stocks are moving around. Pull up these railway-related stocks. And if you pull up IRCON, you pull up IRFC. Big surge is what you're seeing on both these two counters. So good up move on that one. Arvind Smart Spaces as well. The management is sounding very, very optimistic about the future. So that stock as well now has bucked the trend. I think it's making a fresh 52-week high at around 920 rupees. And the other one is Sirma. Remember, the management joined us a couple of sessions ago. And from there on, the stock has seen a big surge. It was rallying on both the 2 days. And today, from the low point of the day, that as well is higher. But I think, Mangalam, it's time to wrap up on the show.
It's time to wrap up on the show. We take the credit for the Nifty moving from the lows a little away from the green. Let's see whether during trading hour, the Nifty goes into the green or not. From Nigel, me, the entire team, thank you so much for watching.